So when you say like, is the property market going to go up or down, 18-year cycle, I don't really care. That we need to we
100%.
need to build a Vegas in the middle of Australia somewhere.
Australia needs a Lion City.
Yeah, did you know, fun fact, you can get crocodile insurance in the Northern Territory. Life is much easier when you're living with your parents, trust me. It's so much easier. It's a wake-up call when you move out. Welcome, everyone, to today's episode of the Smoke Room podcast. We are Ash, Bobby, and DC, and today we are talking about Australian property markets. We've got a few different topics to cover here under the main topic of Australian property markets, which are the incoming crash that I keep hearing about in relation to the 18-year cycle of US property, which apparently affects Australia. We're going to talk about building a home in Australia right now, where you should do it, how much it's going to cost, and is it actually worth it? We're going to talk about first home buyers, specifically in Queensland, because that's the markets that we understand. We're going to talk about land deals, existing properties as a purchase for either living or investment, building equity early and how you can do that, and the power of having a good mortgage broker. Please keep in mind, none of this is actual financial advice. It's just based off our own personal experiences or random thoughts. So, welcome everyone. We've got Bobby and Ash here, myself, Dave. Let's get stuck in.
Let's get stuck in. So keen.
Alrighty, so I guess we'll start off with the first topic, which is the Australian property market crash that is occurring apparently very soon. There's no sort of dead set date on when that's going to happen, but it's something that I've heard about a lot in mostly, ironically, Bitcoin podcasts that I listen to and different information that I read online, where people are saying that the Bitcoin crash at the moment is in line with the property market's 18-year cycle. Is this a topic that that you guys have sort of come across before or know anything about?
Well, I know about the Bitcoin crash, but I don't know about the Australian market crash. So is the Australian market actually going down or staying steady, or what is it doing?
It's currently going up from what I've seen. So, for example, in Queensland, it went up, the property market in general went up average 13% over the last year. Melbourne went down, um, but that's unsurprising with all of the politics and things that are going on down there, as well as the average weather. Although, don't get me wrong, I love Melbourne. But yeah, some of the other states, like Sydney, is pretty stable as far as I've seen, and or New South Wales in general. And I don't really know about anywhere else in Australia. I've seen a little bit of information about Perth, but it looks pretty much the same as less growth than Brisbane, but still one of the more emerging markets. There's obviously micro markets within Queensland though, because Queensland's a massive place. Remember, it's a large land mass, and there's multiple different cities and towns around.
Mhm.
So, for example, like the Gold Coast went up substantially over the last year. Brisbane, like I said, I actually did some research on that one. It went up 13% over the last year. Sunshine Coast was, I think, 7% over the last year, but the year before that and leading up after the whole COVID thing, it went crazy. People went to the Sunshine Coast where properties were previously,
Ballistic.
yeah, absolutely mental. Like I'm talking like they were like 250, $300,000 in 2020, and then 2025 now they're all like closer to a million. So the boom over there was pretty serious. But yeah, I mean, tell me a little bit about, I guess, not so much the macro markets, but if you guys are aware of and maybe Ash, this is a good question for you on an upcoming crash. Is this something that you've heard of as a new
Oh,
home owner? Is this something you've heard of in the background?
yeah, look, it's an interesting topic. Look, I go to a few different networking events and hang around with a few people in the property
area, and a lot of them are quite positive over the next few years, and it's quite interesting, right? I think Queensland's got a lot going for it in the next what 5, 10 years. We've got the Olympics coming up in 2032. So that in itself, I think we see these cycles with the Olympics when on the lead up to Olympics, house prices tend to go up and then they absolutely shit themselves as soon as the Olympics happens. So it's going to be really interesting to see how Queensland can actually capture that and whether we can actually, have that increase in capital or equity, I guess, and then hopefully keep it. So as a new home buyer or a new home builder, I should say, recently built and moved into our own home. And I don't want that house to be worth half its value in 5, 10 years because the Olympic has gone, right? But already
Yeah.
we've seen increase in equity of like $200,000 in just a year. So from signing the contracts to purchase the land to moving in, we've gained over 200 grand in equity without even paying anything on the interest in terms of principal. So I think, from what I'm hearing, yeah, the market's going to keep going. But I think you have to be pretty cautious to jump in now or any time in the next few years, right? Because is it the top? Is there going to be a crash? It's so hard to time it, isn't it?
It's an interesting discussion there because I'm sort of in the same mindset as those guys, the people that you're talking about in these groups of real estate people, where the best time to buy was yesterday, and I'm still
Always.
kind of yeah, exactly. I mean, it's the same with cryptocurrencies. The best time was yesterday. Obviously, there's ups and downs in markets, but having gone through a couple of real estate crashes since owning property, I'm now of a mindset that I'm not really phased, to be completely honest. As long as you don't over leverage your equity, if you are buying an additional property by using equity on real estate, and that's something that I do. I do purchase real estate based off equity of the capital
Mm.
gains that have occurred over existing properties that I have, which has given me a lot of borrowing potential, which is great. But am I slowing down? No, not really. I expect it to be a maximum of 20% as a drop in the value of property, as an absolute maximum. If everything goes horribly wrong, 20% I think is the maximum that it will drop by. Now, at the same time, it does that equate to a drop in the rent that you might make off an investment property? Absolutely, it does. As you know, property gets cheaper, then it's a cheaper entry for more people to buy into, which usually then feeds the market to bounce back. So, for example, the last property crash, the most major one was when I bought my first property in God, how long ago was this? A very long time ago. I can't even remember when it was. I think it was
A galaxy far, far away.
2009, I think. It was quite a while ago. Sort of showing my age here. And immediately after I bought that property, it dropped about 10%, which at the time was devastating because I had put all my everything in my heart and soul and all the money I had into this property. But I hung on to it, and over the last however long it is from 2009 to now, it's gained substantially as far as equity is concerned. The thing with the Olympics, though, that I see, and I don't want to take over the conversation, just be me talking, is
Again.
again, as per usual, yeah, which is the market of an Olympic. So the build up to the Olympics is real. If you have a look at the data for the Sydney Olympics, property went through the roof just before it, and it did crash shortly afterwards because people realized that it was overblown. It was a bubble. But then the people who came to the Olympics from another country who really loved Sydney and the surrounding areas. They actually moved, a lot of them moved to Australia, and it puts Australia in a very global scene, which is something we don't get much of an opportunity to have very often. It's not something that comes up very often. So you see this big gain, and then it'll drop, and then it sort of bounces back. Will it get to the exact high of just before the Olympics? Probably not, but for me, I'm looking more at the rental scape. So I buy property to rent. That's sort of one of my main incomes. Is at the moment is probably my
Hmm.
main income. And that's what I do a lot of research into is if I buy a property low risk, I'm talking under $500,000 within 5 kilometers of the city in Brisbane. They still exist, they're still out there. If they're on the market or not is a different story, but based off the value, that's what I sort of look for.
Dave, do you work with real estate agents, buyers agents to find those kind of properties, or how do you find one of those if you're looking to, I guess, pick something up like that?
It's a good question. And it's all relationships. So something I'm very big on across everything that I'm a part of, if it's business, work, property, is relationship. I'm big on building relationship and community. And that's paid off its dividends 1,000 times over. So I have a few clients through different businesses who are real estate agents, buyers agents, mortgage brokers. Some of them are people that I personally know, either family members, and I don't really just ask one person. For example, I'm looking at buying, I have one unit in a block in Brisbane, just near the city. I'm looking at buying the other 5 units in that block. None of them are listed. So what I've done is I've gone to my friendliest real estate agent, or two of them actually, who sell properties in the Brisbane market. And I've said to them, "Hey guys, can you help me do a little bit of research? I'm looking at buying these properties." And they'll either send letters or get in contact with the owners because they can see that information. But they'll try to help out because that will help them with their commission. Same with a buyer's agent. I have a couple of buyer's agents that I talk to who I've recently messaged and said, hey guys, can you help me buy these properties? I'm really interested in buying the rest. Future development plans, blah blah blah, this that the rest of it. What are they worth? Who are they owned by? Are they are they interested in selling? Can you guys get in touch? So I'm kind of spamming these owners with letters in the mail and calls from multiple different angles, from real estate agents to buyers agents specifically, and with the hope that at least one of them will sell me their property, and then I'll go on to the next
Hmm.
one. I'll just keep going until I get them all. So kind of, got to catch them all Pokemon theme here. I want every single one in that block.
See what you did
Yeah.
there.
Yeah.
So is there a number? Like what is the number of properties like for your portfolio? Do you go for a number of properties or are you looking for a certain rental yield? Like what are you aiming for?
I look for a minimum yield as the main thing I go for. So it's not about how many properties you have until you have maybe more than 5 or 6. That's where it starts getting tricky with borrowing potential. But it really depends what you want to do. If I wanted to have property as my main source of income, I would probably stop buying, or at least put the brakes on the buying that I'm doing at the moment, and work as hard as I can to pay off one property. Keep in mind that that's what I'm doing as well. I put a lot of money into the majority of my disposable income into paying off the mortgages that I have to, and just throwing bulk cash into the offsets to keep the
Hmm.
repayments low, so that the money that comes in keeps the property's positive gearing. I've had a few people ask me about negative gearing, why I don't do negative gearing, and I prefer to have that positive cash flow for a rainy day. Really, it's helpful to have if you're making, or if even if it's only like an extra $100 or $200 a month. That's still $100 or $200 you didn't have before, and that's very helpful long term.
Yeah, I was
100%.
going to ask you about that because I've heard that the tax benefits of negative gearing are a lot better for Australians. So why don't you want that negative gearing?
I think that
Well,
there's some really interesting things you can do with taxation here, right? And this is not tax advice, but I understand you can actually depreciate an asset, right? So, well, in general terms of taxation, you can depreciate an asset that you purchased. So if you purchase a home as an investment property, and let's say it's a brand new house. So if you build a new house and then you want to rent that out to tenants, that then becomes a depreciable asset, right? Which is interesting because we're talking about houses here and how the prices are going up, and then we're talking about depreciating an asset. Anyway, it doesn't make any sense, but you can depreciate the cost of a house and all of the fixtures and things like that over, 5, 10 years, and offset your tax, which effectively becomes negatively geared. So you don't have to spend any money to do that negative gearing. It's a paper-based exercise, for if you fit in those right circumstances, right? Which, I think Dave, you're probably not buying, those new houses. You're buying second-hand houses, if you will. But
absolutely. Yeah.
assets that are already in the market, they're already built, right? So existing properties. Whereas if you were to build a new house, absolutely you have all these benefits available to you as an investor as well, right?
Okay,
True.
so there's like a way to get that consistent income and also the tax benefits of negative gearing.
Yeah, it's kind of funny because you're positive geared. I feel like you're getting a positive cash flow, but then you're getting the negative taxation benefit, or which is positive really, but you're getting a taxation benefit by claiming a loss through the depreciation. So even though you've got this cash coming in, you're claiming a loss against it through your
Yeah.
taxation. So if you've got a high paying income, and this is probably where it actually gets a bit tricky in terms of conversations and who you're talking to. So someone who's on a higher income obviously gains a lot more by doing that negative gearing because they're getting something like 37 to 40% of their tax back, whereas
Yeah.
someone who's on a lower income may only get around 30% of their tax back for the same, I guess, strategy in terms of investments, right?
100%. So to answer the question directly, why I do it as positive is because I want the additional cash flow to increase my serviceability. So serviceability is when you're trying to buy additional properties. And like I said, I'm trying to buy 5 properties. So I need all the serviceability I could possibly get. In the future, once I've hit my goal of having this, whatever the number is of properties in Australia, and they're, renting one way or the other, then yeah, I mean, negative gearing would make more sense because then I'd be trying to bring down my tax as much as possible. But that's going to be very difficult with the way I'm trying to sort of plan this out and make all of this work for me to be able to afford 5. It's not easy to buy 5 properties, especially all in one hit. If they all come back and say, "Yeah, I'd love to sell," can I buy all of them in one go? Well, I want to be able to because I think they will gain over the next 10 years in value. And I don't have a plan to sell these properties because I know this particular market, this region, this street. I know this whole area very, very well. I grew up in that street my whole life, so I know it very, very well, and would very much like to have a piece of that for not just the sentimental value, which is completely useless as far as money is concerned, but and a very bad way to invest, but also I know what it's worth and what a bit of paint can do to the rent that these people are missing out on. So all of these properties, bar one, is rented. So only one of them is owner occupied. And the feedback that I've got from the real estate agents that I've talked to, the buyers agents, real estate agents, whatever, they're renting less than half of what my one apartment rents for. And it's because they're old apartments. They're little units. If you know Queensland fairly well, there's lots of these little brick 2-story brick and concrete apartment units around. There's heaps of them. and they're not very nice to look at. But a bit of paint goes a long way. A lot of, fixing up the skirting boards, putting in a new kitchen bench, fixing up the bathroom with a new vanity unit, things like that. It doesn't cost a huge amount of money if you know some people who can help out or you're capable of doing it yourself. Obviously, you need to get licensed people for some aspects, but there's the potential there is that I could double the rent at every single one of these other apartments. The other option is if I want to go super high yield, is to do short-term rentals. So I'm talking about your Airbnbs and your experiences like that. And that would take rent and for as an example, I can tell you the numbers because I've done a fair bit of research. The apartments here, the one bedroom ones go for around 500,000. 380 to 500,000, depending on how bad it is, how damaged it is. The rent on a one bedroom for that area is roughly 350 to 450. That's what they're renting it for. Now there's a couple of two bedrooms in there as well, like the one I have, and mine rents for 625 per week. It's no different from the others. It's the same size, two bedrooms. The other two bedrooms there are currently renting for 400. So they're missing out on at least $200 here a week in rent. For if you work it out, you spend $5,000 on doing a few little fixes up here and there, your $200 gets paid off your $200 pays off whatever you've spent very quickly. Now, if you go in Airbnb, and I've done some research into this as well, the average per week in that area is they have 92% occupancy and they rent for roughly $200 a day. Now, that's over 7 days at 92% occupancy is that's a lot of money. That's crazy. So, do I do the capitalist thing and rent it out through Airbnb and manage it myself? Or do I do the thing that's probably better for Australia and rent them out as long-term rentals to people who actually need somewhere to live? This is a moral dilemma that I'm having at the moment because I could be potentially throwing away lots of money. But
Definitely Airbnb. Why not?
well, we'll see.
It's
We'll see
insane,
when we
isn't
get
it?
there.
Yeah.
It's all
Yeah,
about
it's
money.
it's almost 2 to 3 times your return effectively to go Airbnb if you were to do that. I guess the trick there is it's not consistent, right?
Correct. Yeah, it's not always like that, but this is sort of the lead up to the Olympics thing. So I'm going full circle here back to the original conversation is when the Olympics are on, and these apartments are roughly 2 kilometers from the CBD. You can see the city from these units, which is one major reason. They're also right next to a university, lots of public transport nearby, lots of schools and all the rest of it, which is good. So long term, they're very worthwhile. But on the lead up to the Olympics, they'll rent I can Airbnb them for a lot more money. So in that period, I would absolutely boom through repayments back into mortgages and everything else just from Airbnb these properties while people are trying to get Airbnbs in Brisbane to attend the Olympics. So when you say like, is the property market going to go up or down, 18-year cycle, I don't really care because I know that if I can get these properties before the Olympics happen, I do them up, make them look nice, put some fancy furniture in there, electronic locks on the door that I can manage remotely, so I don't have to sort of go around there to let people in, and then rent them out through the Olympics. I'll make an absolute fortune, hopefully. I mean, nothing's
2 weeks.
guaranteed. 2 weeks
For
of
2 weeks. Come
crazy
on.
rent. Yeah, but I could rent them potentially for like $400 a night.
Yeah.
Yeah, it'd be interesting to see like how long it drags on after the fact, like before and after, right? So you might have 2 weeks before, 2 weeks after. So maybe let's say 6 weeks of that higher higher rental income, right?
Yeah.
But then the potential even longer after that, potentially.
Yeah. So, I mean, after that, then there'll still be the standard Airbnb market, which at the moment is crazy because there's no properties available anywhere in Australia at the moment, from what I've seen. So 92% occupancy is pretty good. If it dropped down to like 70%, I might consider then taking it out of Airbnb and doing it long-term rental. But I've already made the cash that I wanted to get ahead on those offsets to offset the loans to make them worthwhile
Mm.
having, even long term. So is a short burst of money then, and I guess this is a question for everyone, is a short burst of money worthwhile? Like, give me some feedback. Is this a terrible idea? Am I doing the wrong thing? Is this morally incorrect? Am I an asshole capitalist? All the
Definitely
questions.
asshole boomer. Yeah, okay, boomer. So, no, I think I 100% agree. Like getting that cash and putting it in your offset because, like, once you get that in there, you've got that massive offset. Then you're saving on the interest, right? So, even if you only do that for a little bit, let's say you add 50 grand into your offset, and then, for the next 10 years, you've got that 50 grand sitting there offsetting the interest, and you're paying, way more principal off, right? So I think in the long term, if you're in a position to be able to do that, get a little bit more cash up front, and then save that interest over time, I think that sounds like a winning strategy to me.
What do you think,
I,
Bobby? Give us
um,
the Bobby angle on this one.
I'd say, do you think this is an anomaly? Do you think that prices are going to more go down more in the future for Airbnb, or do you think that they're just going to stay this way and this is just the new norm?
I don't think they'll stay this way. I think they'll continue to go up over time as demand increases. If you have a look at how many properties are being built in Australia just for people to live in, there's not enough for people to live in. There's also not enough for people to Airbnb. With 92% occupancy, that means there's a rush in the market. There's too many people looking to come to this specific region to stay or to work. Like a lot of people come into Brisbane City to do some work from other cities. And if you stay in a hotel in Brisbane City, you're up for a lot more than $200 a night. You also don't have a kitchen. Like you might have a kitchenette, a very small version of a kitchen, but it's not a full-blown kitchen. And if that's something that's important to you, then you probably won't get it. A lot of uh, 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 hotels also don't have a bathtub. These places do, the ones I'm looking at, they do have bathtubs. So if you have a kid, then you might need a bathtub. Some hotels do have bathtubs, don't get me wrong, but the ones at around the 250 to $300 a night mark, probably not. The other benefit is you can bring your pets. Hotels don't let pets in. Most hotels, anyway. Some of them do, but they cost a fortune. Airbnbs, a lot of them, you can bring your pet, you can bring your dog, you can, you can have a little barbecue on the side. You get more of an experience. Yeah, I don't think to answer the question directly, I don't think the market's going to go down anytime soon because supply and demand exists, and the demand is higher than the supply.
I
Yeah,
think there
from what
is a
I've heard, that people are coming from other parts of Australia to Brisbane. So I think the longer term rentals just make sense.
Yeah, I think you've also got to worry about what happens after the Olympics. Is there going to be a flood of supply and therefore prices will go down? Like, is the Olympics going to actually bring the long-term residents to Queensland, right? So people are going to come to Queensland and go, "Fuck yeah, Queensland's awesome," because it is, right? Are they going to come
Yeah.
here and realize what we've already known for the last 10 years and then decide to stay here? Probably, probably. Like Sydney, no, but Queensland, yeah. So it it's probably fair to say that, yeah, there's going to be an influx of people wanting to come to Brisbane and live here, I think.
I think so too. The benefit of owning all of these apartments, and this is the back end, the future long-term goal, is if I can own a relatively large block of 6 units in a region of Brisbane that's already zoned for 8 levels, like eight floors, if I wanted to, I could potentially redevelop, and if I had the money, I could redevelop that block to compensate for that desire, that supply that doesn't exist. So build up on top of it. Get a whole bunch of people to just build up and do a development. I'm personally not very big on development, but I mean, it's a future plan. If I had the money to do it, I might do it. I might, try and get that going. But it's a good segue into the next question that we had here, which is building a home in Australia right now. Where would you do it? How much is it going to cost? And is it actually worthwhile? Um, as someone who's not really in the development space, you guys might have a better answer to this, especially Ash, seeing as you've just built a house, so technically developed a house. Um, well, kind of. I
Technically,
mean, you
something.
you
Yeah.
bought a house off the plan, but yeah,
Something like that, yeah. And you said segue. I mean, I was pulling up a video. I was kind of like, "Go segue. This is a great time to start talking about building." So, I think it's a tricky thing at the moment, right? So, I guess land is hard to come by, and I think it's getting harder to come by, and the only thing that's helping that is governments effectively clearing new new developments, really. So, out where I've decided to build this house that me and my wife moved into, we're surrounded by more developments which are just opening up, and they're clearing land and doing all that civil work to get it all ready, right? But the prices are insane. So, for a 500 square meter block, what we paid 12 months ago, it was around the $350,000 mark, right? But what you're looking at now is closer to 400, 500 for the same kind of size. And I think, the further, as time goes on, those blocks become smaller and they're further and further away from the city. And so we're seeing this even on the north side of Brisbane as well, where housing developments are starting to move further and further up. So we had North Lakes probably 20 years ago,
yeah,
probably even longer than that now. It's what 20, almost 2000, right? And we've shifted further and further and further north from North Lakes. So you go on North Lakes up to Narangba, up to Caboolture, and now we're going past Caboolture, right? So there's new developments up there. Like you've got what is it called? North Harbour, I think, which is just past Burpengary, near Caboolture. So we're just going further and further out, right? And
yeah.
in those estates, they're just getting smaller and smaller blocks. So even in the estate I've decided to build in, the house next door is on a 320 square meter block, and it's a duplex. A duplex. There's
Oh
the
wow.
two. Yeah, I haven't told you this. There's a duplex on a 300 and something square meter block. So you're getting a lot less for your money. And
Yeah,
yeah, I think the standards of living, kind of, I feel like they're going down. No one's got grass in their backyard anymore. They've got maybe a bit of grass at the front and a driveway, but it's not like the 90s where, our parents, they bought these houses with, massive gardens out the front and heaps
yeah,
of grass and long driveways and all that kind of stuff. That's not a thing anymore. You can't buy a house or a land package that has that kind of stuff anymore. So, yeah, I think it's gonna change the way kids these days, live and grow up. Not
absolutely.
seeing green spaces, right? That really irks me, not having green spaces. But yeah,
So why is it that you can't build out? Because I mean, here in Texas, I only really know the Houston market, but we keep on getting bigger and bigger and bigger. Like you look at the Houston Metroplex on a map and it's massive. So why can't you do that there in Brisbane?
you mean like spreading the city out kind of thing?
Yeah,
Yeah,
like just
I
building
think
more suburbs farther out
yeah,
because
I think that's
Australia
part
has
of
the space.
yeah, I think that's kind of the idea, right? So, I think if you look at all of the cities in Australia, I think we've got this issue with massive highways and they're all blocked and people trying to get in the city every day, but that there's just so much moving around that I don't think we have the ability for people to start living in these like little satellite cities, if you will. I think there was a bit of an idea a few years ago of these I think they're called like 15-minute cities, right? Where the idea was you can get anywhere you needed to go in 15 minutes. And I love that idea. I think it's great where, it's 15 minutes to get to the shop, 15 minutes to get to work, 15 minutes to get to this and that and whatever. I think that's a really great idea, but people need to shift their mindset to be able to do that. And I think working from home has really started to enable that. So even out here where I am, closer to Ipswich, more people are able to work from home now. So the idea of living so far from the city isn't as bad. But at the same time, like for me personally, with my business, I'm actually looking to set up maybe an office in Ipswich or maybe somewhere else. Why do I need to be in Brisbane anymore in the CBD? So there is that possibility, I think, over the next 5 to 10 years where I think maybe we'll probably start seeing some of those like satellite city kind of ideas start to happen. I think Ipswich, for example, is,
Ipswich is
ready for
prime
that.
for it, especially with like
Yeah,
Springfield
100%.
Lakes and everything around it, the Red Bank
Yeah. Oh
redevelopment,
man, I was
all
at
the rest of
Springfield
it.
Lakes today. I was out there today, and there's these big commercial complexes there, and
It's
I
massive,
kind
yeah.
of never realized they were there. And I don't know who's who's kind of tenanted in them, but you got a data center out there. You've got these big commercial buildings, and you've got a pool and shopping center.
Yeah.
So everything's kind of there, and it's like 15 minutes up the road from where I am. So.
Mm. Yeah.
I wouldn't be opposed to that. I would happily do that instead of traveling into the city every day. But I don't think everyone's got that mindset yet. And certainly a lot of people work trades. So you've always got trades who always have to travel around and they almost probably always want to be closer to wherever the work is. Like, there's no point being on the north side of Brisbane and servicing Ipswich, for example, and vice versa.
Yep.
So someone who lives in Ipswich is going to service Ipswich, and North Brisbane is going to service North Brisbane. So I think it depends on your business. If that's the kind of thing you do and you travel around all day, that's going to have a big impact on where you choose to build. But
Yeah, definitely. Like
I think.
a big reason why Houston is so big is because we do have that. Like the reason my parents moved to Houston is because my dad got a job at NASA, and NASA is in Clear Lake. It's not Houston proper. It's maybe like 30 minutes from Houston, but we
Yeah,
have
right.
that sprawl too. Uh,
So to answer the like,
Yeah.
why don't they just expand out Brisbane? They kind of do. So that's what I was mentioning before with, this area 2 kilometers out of the CBD is zoned for higher apartments, like higher build, you can build up even further. So they do that. It's just that it's really expensive to do that. You have to do kind of what I'm doing. You have to buy each of the apartments out because no, it's not like a lend lease situation. It's not like China where you can just tell everyone to get out and you'll pay them a bunch of cash to move, or that building is getting close to its age limits and is going to get redeveloped anyway. It's not like that in Australia. Those properties will be there forever, and those units that I'm buying are old. I know when they were built because my grandfather built them, which is another major reason why I want to buy them back into the family. But which is the whole sentimental value that I talked about. But they are old. They're older than me, and that's very old. So they're older than boomers apparently. So it's yeah, they do redevelop with the something to unpack that Ash said here as well is that with remote work, people are moving to the places that they and to expand on what he said, the people are moving to the places that they like, but also places that they can afford. in these sort of satellite cities. So people are moving to Ipswich. I mean, Ipswich has grown a lot over the last 5 years, especially, but also the money has moved to the places that people really love. So you'll see a lot of growth in coastal areas, for example, because something quintessentially beautiful to Australians is the beaches. The beaches in Australia are sensational. If you go to any other beach in the world, there's lovely beaches around. Don't get me wrong, but Australia has a very special beach life situation. So people go to places that have the infrastructure, the entertainment, the schools, and the lifestyle that they want. They're moving for the lifestyle. The problem with a lot of these beach areas or these coastal regions is that they're kind of landlocked. So the Gold Coast is a really good example of this, where there's the ocean, then there's the houses and the apartments and all the rest of it, the hinterland, and then there's nothing. Now, there's a reason why there's nothing, and it's because you can't build there because there's koala habitats. There's, lots of fauna and flora that you can't get rid of. You're simply just not allowed to. So it's kind of landlocked from, if you go, say, Surfers Paradise to Nerang, there's not much back from Nerang. You sort of have nothingness, and then you've got Lamington National Park, and that's kind of it. That's it. Like there's a huge national park out there and a bunch of koalas, and you can't touch them. You're not allowed to. So it's yeah. I mean that's the interesting part. But to stay on topic here, if you're building a home in Australia, where would you do it? How much is it going to cost, and is it worth it? The is it worth it question really depends on where and how much you're
How much you
spending
build.
to developing. Yeah, so it kind of flows back. There's a few regions that I've looked at, and some of them better than others for various different reasons. I'm not a professional. This is not advice at all, but this is based off my own sort of research in if I was going to buy around Australia outside of my little sentimental love apartment unit blocks. I would look at Ipswich. My first property was in Ipswich. Everyone told me I was crazy. It's quadrupled in price since I bought it. It's fantastic. Ipswich is still good though. It's still affordable. If you were to buy even a pre-existing house there, there's some good deals, and they're not all terrible. Just be careful of the flood zones. Another really good area is in Geelong, in Victoria. It's about 45 minutes out of Melbourne if you want to go to the city, or if you don't, up to you. You can stay in Geelong town. There's a lot of infrastructure. My recommendation here for anyone who's sort of buying their first house, and if they have a remote job and they want to go for the lifestyle, think about the lifestyle that you want. Do you want to be close to your family and friends, or are you happy to move, an hour away, a couple of hours away, maybe a completely different state, which is potentially days drive away, or at least a couple of hours flight away? Those are questions you need to sort of ask yourself. Then to work out how much money
See
you
you in the
have.
NT, mate.
Yeah, well, I'd rather not, personally, but yeah, I mean, you can go to the NT if you really like, buddy. But yeah, if we get some work out there, maybe. But yeah, did you know, fun fact, deviation from the topic here, you can get crocodile insurance in the Northern Territory?
Is that like part of your home contents, or is that
It's
what does that
personal
come under? Is
insurance.
it is it separate
It's health
personal insurance?
insurance. Yeah,
Health insurance.
personal
Okay.
health insurance. So to protect, because croc attacks happen so regularly that you can actually take out a policy for health insurance there. How funny is that?
And is that
Wow.
something
That's
is that
pretty
something you
funny.
take out with your booper, or like your boopers and
I
Medibanks, or
guess
is
so.
it like
Yeah, I
a
think so.
specialist
Yeah.
kind of thing?
I don't think it's
'Cause I
specialist
don't
at
have a
all.
thing on my health insurance. I'd love to look at my health insurance and see, where's the crocodile clause, right? I
Yeah,
don't have one,
because
so
we're like primarily in Queensland, so my health insurance is based in Brisbane as well. I've got like
yeah,
that the family plan thing through Bupa, and I mean you kind
no
of have
crocs.
to. Yeah, no Crocs on my policy though. But yeah, so sorry to deviate from the point there. Just a random fun
I
fact.
want to I want to deviate a little bit. back to where we were, and that
Yeah.
is, other areas, right? So I mentioned earlier, everything's kind of shifting up that north side of Brisbane as well, right? And
Mm.
Moreton Bay's always been a bit of a booming area, and I think the limits of Norton Bay are probably a bit pushed now until you move. I don't know if Caboolture is in Moreton Bay now. I think it might be. But once you go Caboolture and north, there's a lot of land that's going to get opened up over the next 10 years, right? Between effectively Caboolture all the way up through Sunshine Coast. But I came across this the other day, and I'm going to just quickly share it with you guys
I
because
think
it is
Caboolture is
fantastic.
still part of the Pine River Shire.
All right, you guys got my screen there.
Yep.
So there's this new development that's been proposed called Infinity Planet, which is just around Moreton Bay. And I don't know if you can see that, but it is behemoth,
It's pretty
absolute
large.
behemoth.
It looks like Disney
Largest
World.
integrated entertainment and
Yeah, I was
cultural
just
city
thinking
in
it
the
looks
world.
like Disney.
It is, yeah, it's been compared to Disneyland. Now, I would love to understand what that could do for Moreton Bay and people living there. Like, this is huge. This is
Yeah,
a
it's like either
massive
Disney or
development. Like,
Vegas.
it's got hotel complex. That looks like some sort of Las Vegas thing, right? Like you just said, Bobby.
Yeah, it kind of
It's
looks
like
like
Vegas.
Mandalay Bay
It's
or
got,
something.
and then the City Hall. I mean, that's like the Vegas
That's the City
Dome. You got
Hall.
theme park, this tech park, global cultural mall. Like,
If that city hall is
That's
made
I don't
of
know.
crazy.
glass, people are going to
To be
die in
fair, it
that
does look
room.
like SimCity. This diagram does look like it was made in SimCity, but it
Yeah, it
does look
does.
SimCity.
Damn.
Look at that, 2030. I mean, that's in time for the Olympics.
Oh yeah.
Yeah.
How
Yeah.
close is that to where the Olympics are going to be?
Not very.
Yeah, it's probably half hour, an hour.
Uh-huh.
It's at least an hour, dude. Moreton Bay's ages away.
Yeah, yeah, we'll get bullet trains by then, won't we? Come on.
Sure. Yeah. I mean, are China going to build them? Because if Australia's building them, they won't be here until
Still
2050.
on the Silk Road.
Yeah.
Yeah, well, maybe they'll have to, but yeah, I mean, we haven't started on the Olympic Stadium yet, so we might need some external help.
Maybe. But yeah, I think just to rope it back in, I mean, that looks like an interesting development. Is it going to happen or get approved? Is it fully approved and everything? Like it's
I
in
don't
the
think it is
works
yet. I think
or
it's just a proposal. I would
okay,
love to see it get up, but I think it's just a proposal at the moment.
interesting.
It doesn't even look
Yeah,
like a normal city.
no, it doesn't. It
No,
looks
well,
like a
apparently
theme
it's
park.
modeled off. Yeah, it's apparently it's modeled off things they do in the United States. I mean, I've never been somewhere that looks like that even remotely. So
Yeah, Vegas is
maybe
the only thing I
Disneyland,
could think
like
of.
I don't know.
Do we need to build in the desert? Is this the answer to Australia's property crisis that we
100%.
need to build a Vegas in the middle of Australia somewhere?
Australia needs a line city.
Well, what was that thing that they built in? Is it Saudi Arabia? They're building that. Yeah, did you say line?
It's
Yeah,
called
the
the
What was
line
what
line.
the
city. I
line
think
Yeah,
it's
yeah.
Saudi
Like a
Arabia.
kilometer along or something?
Yeah, it is
Yeah.
I
Saudi
think they
Yeah,
Arabia.
ended
just
up.
build that out into the outback.
I think they ended up. Didn't they end up canceling that? Like they started building it
I
and then they
think
decided,
so.
oh,
Yeah.
maybe that was just a bit over the top, and maybe we'll just do a little bit smaller.
Yeah, it makes sense.
That's crazy. But yeah, I mean, those places that I mentioned are where I would, if I was buying my first house and could work remotely and wasn't worried about my family being nearby, all my friends, then I'd probably go to, well, yeah, I mean, Ipswich is maybe not that far for people. Geelong, maybe not that far for people, depending on where you're from. But those are the places that I would be looking at. How much is it
Hmm.
going to cost? I don't
They're
know.
well connected, I think. Having those good highways, like Geelong is not a long way from like Melbourne, like on the
No.
highway. It's pretty quick, right? Ipswich, very quick. Like I've got one of my kids works, closer to the city at Hungry Jack's, and I, drop him off at work. It's a 25, 30 minute trip, but we do that, and it doesn't actually feel that long, and even the commute to work, like the other day I drove into Brisbane City from Ipswich, and it it was 25 minutes or so to drop one of the kids off at school, and then from there it was 15 minutes into the city. And look, coming from, earlier in my career, I was driving from Kalenga. If you know Kalenga, it's on the far north Brisbane. It's probably an hour to the city from Kalenga, and then I was driving to Acacia Ridge from there, and I do that every day for about 4 or 5 years. So I'm pretty accustomed to driving that far. But this is nowhere near the same commute, but it feels like the same kind of distance. But it's
Yeah.
it's doable. I think it's doable, right? And even public transport, 50 cents. Yeah, come on, Queensland, 50-cent fares, like you can get anywhere for 50 cents now. So oh, it's just how much of your life do you want to spend on the train and commuting if
Yeah.
if that's what you do, right? So I
True.
think that's a big thing. That's a big thing.
When I was living in Ipswich, so when I bought that house, I was working in the city, and it would take me. Or I would usually I took the train. I used to spend a lot of money on the train, so I ended up driving. And at that time, they hadn't fully finished the highway upgrade, so it would take me 45 minutes to an hour in peak hour traffic to get into the city. Um, that's obviously improved now. It sounds like it's about 40 minutes to get in, which is good, or even less, depending on which part of the city you're getting to. Um, and yeah, I mean, in the end, it was cheaper for me to buy a motorbike and ride a motorcycle into the city from Ipswich. And I think a lot of people forget when buying their first house that, and this is something that I've had conversations with people about before, and they've sort of dismissed me as being a boomer. But the main thing is that if you expect to buy a house that is similar to the one that your parents have in the same sort of zone that they live in, you're in for a rude shock. If I wanted to buy the house my parents had, I still can't afford it. Um, it's
Hmm,
it's
100%.
2 kilometers from the city. It's on a 600 square meter block, which doesn't exist in the city anymore. Um, it's impossible. I couldn't afford that. I still can't afford that. I don't like
That's like,
that's just
2 million,
crazy.
right?
Oh, at least, yeah, yeah. It'd be yeah, at least about 2 mil in Brisbane these days for that kind of property. Hmm. Like 5 bedrooms, huge block, garden out the back, garden out the front, white picket fence, all the rest of it. Back then, they spent nothing on
Total
that
boomer
house.
house. Yeah.
That's the ultimate boomer house because they spent like 35 grand on that house, and that's worth what, 2 mil-ish.
Wow.
Um, and that was a long time ago. That was well before I was born, about 5 to 10 years before I was even born. So that was like 40 something years ago. So, I mean, it's gained value in 40 years, but back then that area, and the area is Kelvin Grove slash Red Hill in that area. That wasn't a nice bit of town. Most people wanted to live in Paddington or the Gap or Ashgrove, those sort of suburbs in Brisbane. But now Kelvin Grove and Red Hill is like it's pretty good. There's a lot of stuff there. So does that mean then, and this is something that I've thought about before, are those satellite cities going to become like the Red Hill Kelvin Groves of the past, where they're affordable now, and maybe that's something you can look into if you're looking to get into property, to get into those sort of places. And then in the future, it becomes like its own little sovereign city thing. Maybe that's the answer. Anyway,
I know
food
that's
for
what's
thought.
happened around Houston, like Katy and the Woodlands, they're like pretty far from the central Houston, but yeah, they're like their own cities and doing great.
To close that topic off and to get on to one of the last topics here, and we've kind of already covered mortgage brokers, I guess, sort of when I was mentioning about buying these places. But the last sort of main topic that we have here is building equity early. And I'll tie in here the power of having a good mortgage broker, which is that if you have a good mortgage broker, they'll be able to help you to get the loan that you need for the type of property that you can afford. And their advice is normally very black and white. From my experience, it is anyway. They'll tell you if you can afford this or not. They'll tell you exactly how much money you can borrow and what kind of repayments it is that you'll get on that loan, depending on your credit history, if you've bought before, etc. So building equity early is an interesting topic and something I mentioned in the last podcast, which was, if I was going to buy in Australia, I would probably buy an investment property first and continue living with my parents. The main reason for that is if you guys are in a similar sort of age group, at least within 10 to 15 years of me, and I'm 36, 37, 37. So yeah, I forgot how old I
Seven.
am. Once you get over 30, you just stop counting. But if I was, if I was 20 something, I wanted to buy my first house, I'd stay living at my parents' house because they live near the city. And if I'm working near the city, that would make sense to me. There's more opportunity for work, which I think is why most people still want to get closer to the city. I would then buy somewhere that's affordable but has a good rental return. So I'd look straight into investing. Would I miss out on, the grants that come in? Yep. Would I miss out on, a few other things that would make it easier to buy a house to live in? Yes, you would. But long term, you're going to build that equity early to be able to buy that forever home or potentially even another investment property. Maybe you're happy living with your parents. The other option here is rent vesting, but that makes things
That's
hard
fair
when you.
investing. You read my mind.
There is rent vesting. I've done rent vesting before, and we've touched on that before where I lived in the valley. But and a lot of people do that, but if you have the ability to stay at your parents' house, you get sort of free food. You get maybe you pay board to your parents, maybe you don't. Um, Life is much easier when you're living with your parents. Trust me, it's so much. It's a wake up call when you move out. Um, if you can do that and buy a property and put a truckload of money into the repayments or your offset, you're going to build so much equity. So, and also gauging that the property will potentially go down 20% in value over the next 10 years, but the chance of it going up is substantially higher than it going down by 20%. So, if it goes up by 20% over the next 10 years, you've made some pretty good capital gains. You've made a bit of money off that property, which is great. My main advice here is to buy cheap, do some renovations, but do your due diligence on if it's in a flood zone. What kind of area is it in? Is it right next to um, the community housing areas? Is it a good or a bad area that you're buying into? These are things that you really need to think about because that does affect the future value of the property as well as the current value for renting, which is ultimately what you're going to be doing as an investment property. You'll buy it, maybe fix it up if it needs to be, and rent it out. That would be my advice. The other option that you could do is the one that I did, which I don't know if I'd recommend it, but it worked for me, which is I bought my first property was in Ipswich. So I moved out to Ipswich from Kelvin Grove. Very different lifestyle, but I wanted that property. It's a four-bedroom house, and I rented out each of the rooms individually. So I changed the locks on each of the bedrooms, and uh, so that each person had their own set of keys for their room. So when they leave the house, they go to work, whatever, they lock their room, that's their space. The common areas were the kitchen, the living area, and the outdoor barbecue area in the backyard, obviously, with the clothesline, which everyone, while I was living there anyway, everyone had like a bit of a roster to do, the mowing or take out the rubbish or whatever it was. And if you're living there, you can kind of keep a bit of a close eye on what's going on. That worked out pretty well. I was renting those rooms out for $150 each week back then, which was pretty good. Looking back at it, that was actually a genius move, I think, on my part, because I got ahead on those repayments and I built that equity early. I didn't foresee and the main reason I did it is because the property value went down, um, and I wasn't getting paid much by work, and I had some personal life situations where I had to pay a truckload of money. So I needed money quick. So that was the main kicker. I was like, I need to rent these rooms out. So I went on to Gumtree because that's what you used at the time, and listed out these rooms for rent. Um, After a couple of years, I ended up renting them on Facebook Marketplace, and then using like roommates.com, and I've done them all. I've been called like a slumlord. Just the every name under the sun. I've been called them all. It doesn't
I think
affect
it
me
was me
anymore.
they called you a slumlord.
Yeah, not just you. It's multiple
I'm all
people
knowing,
have
yeah.
called me a slumlord before. Yeah, the Lord of the Slum, property mogul. Um, but yeah, I've got some interesting stories out of that house. I've had a mate who's asked me to make like a storybook of all the random shit that's happened in that place before. But I've seen it all. I've seen crack dens in the garage. I've seen brothers and sisters moving in, and then one of them had a kid. I've literally seen it all. Every situation you can imagine, that house had it. And these days, I rent it through an agent, so it's all nice and dealt with.
Logbook.
Yeah, logged
That
properly.
must be a nice change.
But yeah, I mean, it was very helpful to have that additional payment. So that's another option for you young people or people maybe not young who are trying to enter the property market. That's an option for you if you're happy with your personal space being shared with other people. When I was 20, I didn't care. I couldn't care less if someone else was living in the house as long as the payments for the mortgage went through. Couldn't care less.
One of the biggest issues, obviously, for younger people at the moment is getting that initial deposit. So I think every time you see a news article, right, or someone who seems to have just moved into a nice new house and they're like 18 or 20 or whatever, the first you read the comments, right, and the first comment is always like, "Oh, mum and dad's money," that kind of stuff, right? And there's probably a lot of younger people looking to do this on their own and not be tarnished with that. Oh, you just got dad's money or mum's money, right? So what are some ways that younger people can actually potentially get there sooner? And I've got some ideas of my own, but Dave, do you have any recommendations there?
Um, Yes, and it's funny you say that because people said the same thing to me back then because I was 19 when I bought my first house. People said, oh, that's dad's money, all the rest of it. Not at all. My parents weren't
Hmm.
even in the country when I bought the house, and they didn't contribute anything to it either, which was interesting, except a washing machine. They bought me a washing machine, which was very nice of them,
Oh, yeah.
um,
No.
which was lovely. Yeah, I appreciated that a lot. But I think I'll tell you a bit of a story. How I got my deposit for that first house was by having a repair computer shop. So I had a small repair computer shop. It was one of my first businesses. I did lots of other random stuff like web design and all sorts of things out of this computer shop, but I had that business and I had the foresight to sign up people on managed IT contracts. So small businesses around, like the tattoo shop next door, the Thai shop up the road, their point of sale system. I was doing everything I could to get these little clients in. And I had a few of them and ultimately sold that business for, I think it was about 15 grand. And so not much. Don't get me wrong, I'm not like a multi-billionaire selling this business, but I got about 15 grand out of it. Sold the business, got a full-time job, and I had about $8,000 in my bank account. Now, at the time, that was in today's equivalent money, that's probably around like 50 grand worth of savings. So, my advice for people would be to have a side hustle to be able to bring in a little bit of extra cash to be able to save. If that side hustle is Uber Eats, all the power to you. I couldn't care less what people do for money. If they're working hard to make money, all the power to you. If you're recharging Lime scooters, fantastic. Go nuts. If which is ironic because that's how me and Ash met by recharging scooters once. Um, Long story, I won't get into it. If it's any of those sort of um, small economy businesses that can make a little bit of extra cash. Even if it's like driveway cleaning, if it's starting a YouTube channel and really giving it a red hot go and being consistent with making content so that you make an extra $200 a month. It goes a long way at the start and it makes a big difference over time. Getting in on those things really like try them all. I'd recommend trying them all. That's my advice. I won't digress any further.
I tend to agree with all of that, and I think you know there's career people as well, right? So especially if you've been in your career, say 5, maybe even 10 years. So let's be honest, like there's going to be 30-year-olds who are probably struggling to understand how they're ever going to get into a house as well, right? But you're probably earning 100 grand, maybe even more now, as a 30-year-old. So if you're doing that, start looking at other ways that you can contribute to that savings as well. Like, if you can't save, then maybe talk to your payroll team and use the extra super you can do, right? So Australia's got this awesome scheme with the First Home Super Saver where you can contribute extra to your superannuation. And we made full use of this. We contributed something like $40,000 to our super, which also got capital gains and everything in it while we were contributing. So we were able to do that and then pull out that 40 grand to pay our deposit. And
Yeah.
that's I think that's a really awesome mechanism because you are actually making those savings without doing anything. It's automatic. It's like your work is paying that directly into your super for you. And yes, there's some contention around using your super for buying a house, but if you have the ability to put a little bit extra away, maybe $500 a month or whatever, into your super, and then you're able to pull that out to put into a house deposit, then why not?
Absolutely, why not?
Do you also get employer matches on your super?
I think that's more of yeah, it's probably not all companies do that, I don't think, but
Some do, I
it used to be
think.
something I remember that happening a lot back in the day, but I don't see that anywhere anymore. Certainly not in any of the jobs I've been in anyway.
Yeah, me either. I haven't seen anything like that recently. I think there's a couple of like larger companies like the Microsofts and Googles out there that do something similar, but they're not going to like dollar for dollar match. Um, some of the super funds do something similar to that, though, I think, where if there's a limit of, I don't know, $500, but they'll match you
Hmm.
$500 and, you know,
That's a government thing, I think. And so if you do, don't quote me on this, but I think there's a thing if you contribute to your spouse's super, like say you put $500 in, they'll give you $500 as well. And that's a government or ATO kind of thing. So again, don't quote me on that, but I feel like that's something along those lines. But you can't use that. You can't use that for your for your first time super saver. So
no.
don't get caught.
Yeah. Um, there's lots of different side hustles that you sort of can do to make that extra bit of money, which is a good segue to the last bit of this podcast, which is what we're going to talk about in the next one. The next topic is side hustles that actually make money. Um, I've tried a lot of different ones. I'm pretty sure Ash has tried quite a few. I think Bobby is on the ramp here for different types of side hustles to just to make a bit of money and maybe having that discussion around stuff that we've tried and also based on research of what other people are doing will help you guys to think of something that could potentially bring in even if it's a couple $100 a month, it really does make a difference. So yeah, I think that's a good place to end today's podcast is next time we're going to talk about side hustles that actually make money. Today we've been talking about the Australian property market in detail. Thanks for coming along, Bobby, and listening to the Australian property market. I know it's a little bit off topic for you being in the US, but I think it's a really important topic that we cover to give our experiences. In these different areas. And hopefully, there's been something in today's podcast that helps you to think about your next steps and what you could potentially do. With that being said, thank you for watching. We've been Bobby, Ash, and DC, and please do subscribe. It's the one thing that helps this channel to grow. And we would very much like to grow so that we can bring in professionals in the topics that we're talking about to discuss those different topics. So if that's, a Bitcoin professional, or if that's a professional in Bitcoin, but maybe someone who's successful in Bitcoin recently and didn't just buy early. People in the whole crypto mining communities, people who are property professionals. Maybe I'll ask my mortgage broker to come in. He can give you a full rundown of my terrible credit history and sort of how I've sort of turned that around, or how he turned that around. Maybe I'll ask my buyer's agent to come on. Real estate agents that I'm very friendly with. Having a larger following gives us credibility to ask those people so that they don't feel like they're just wasting their time talking. So please do subscribe, like this video if you enjoyed it, comment below if you have any questions, and we'll see you on the next one. Thanks, Bobby and Ash. Appreciate it, guys.